2013 annual report on the development of new media in China revealed an unbelievable fact. In the past 3 years in Beijing, the percent of television set usage has dropped from 70% to 30% due to the impact of PCs and mobile devices. And between 2007 to 2012, the scale of internet video advertisement has increased over 120%. Online video platforms have become the new preference for audiences both young and old.
Every day we stream, in average, 3,000 years of videos per day.
Wow. In May of this year, PPS was acquired by Baidu. And last year, Tudou and Youku combined. The mergence between online video suppliers seems to be a common phenomenon. And the company who can acquire another major video platform, PPTV, will become the third force in the triangle of this industry.
PPTV, that stands for peer-to-peer, people-to-people.
Will PPTV choose to cooperate with the IT conglomerates, or will it become listed on its own? Today, we will meet Vincent Tao, CEO of PPTV, to find the answers. Vincent, welcome to the show.
Well, nice to meet you, Stephen.
Nice to meet you too, and I'm looking forward to this conversation because the internet is changing our lives, especially when it comes to video streaming, and maybe a lot of our audience members are watching right now online.
Right,
and before
maybe someday our program is changing as well.
I hope so, maybe interactive in the future. And we're going to get to the future in this conversation.
Yes.
But let's start with today.
Okay.
You do have competitors, and as I did research, I found PPS and PPTV. And help us decode this. What is PPS and what is PPTV?
Yeah, PPS is one of our largest competitors, recently acquired by Baidu.
Right.
And you might heard the news from that. But we're primarily focusing on live streaming. Okay. And PPStream was working on on-demand video streaming.
Whether it's films, movies, or TV series, is that right?
Okay. Right. And for us, it's most difficult, I think the challenge, or the technical question for us is live streaming. Mm-hmm. Live streaming actually is different from video on demand.
Okay.
When you're watching video,
technology.
Yeah, when you watch the video on demand, you may get buffered. You hate buffer.
Right.
But you can live with it. But when you do the live streaming, you cannot stuck in any moment.
You know, when
you
watch
goal,
right?
Correct. When you watch the game and the sports game, you say, "Hey, you're stuck."
Yes. Right.
So people gonna be you're gonna create
aggravated. They'll leave. Yeah. They'll just click away. Right.
Yeah.
Right.
So that's why the live streaming. So PPTV is the largest live streaming network. And not just in China, perhaps in the world.
Okay. And also, I understand you covered the World Cup in 2010, is that right?
That's right, yeah.
Talk about that from a technological point of view. What was that like? What did you have to do?
I'll give you a good example, actually. When I was working on Microsoft, and for the one of the really the big show, like those live games, Microsoft at one time, we bought Intel bandwidth of the United States. And Microsoft network could support maximum 3 million users concurrently.
Okay.
3 million users.
That sounds like a lot, but when you're looking at your numbers now,
that's right.
It's not much.
But in China, of course, you have a way over that kind of a population.
Sure.
Yeah, when you watch those like big show like Euro Cup. Yeah. So when we stream the Euro Cup, and we have user about over 200 million users watching the Euro Cup. So you will use a standard technology. You can, if I own all the bandwidth of China, I would not be able to support it.
So how did you find the bandwidth?
Yeah, that's why there's a peer-to-peer works. The peer-to-peer computing is any computing device join the network will need to contribute its own memory and power. Any of those computing device, whenever they join the network, they become a computing node of this whole network.
So if our audience is watching now, if they're streaming this, they're supporting this. They're adding power to the show.
Correct, yes.
In the competitive video industry, PPTV stands out with its live broadcasts of sports events. As the only official licensed live client software, PPTV broadcasted the 2010 South Africa World Cup and received hundreds of millions of concurrent viewers. In September 2010, PPTV Live transmitted the Premier League as the exclusive technology supporting platform and web distribution platform. And in 2012, it also became the only online platform to live broadcast the Euro Cup.
This is one of our studio.
Wow.
And this is sports studio.
Okay.
And we have actually studios, about 7 of those, like this one. All right, so let's have a show tonight. All right, Steve.
What game are we announcing tonight?
Right. Tonight, what is the football here? And actually, there's control room down there, and there's people working down there. So this is a similar setup like the traditional TV studio.
Absolutely.
But here is more internet. So we have a lot more interaction, and usually when they play with the computer, you can see the comments from the internet users.
The live comments.
Yeah, the user actually was sending their comments here, so the commentator basically can talk about with the audience directly. So this is the internet platform, and the way we're making the programs, probably the philosophy is different from the traditional TV broadcasters. Of course, we do invite some famous commentators, and also we get the people to join the production. So usually what we do, for example, is like a soccer game. You can get into different studio, different rooms, and each room will have different commentators, and some even speaking their local language, for example, the Shanghainese. So you'll see it's a very different way of presenting the sports matches on the internet.
On June 4th, PPTV announced to change its sports center to the Sports Media Business Division.
Right.
And it's going to separate the sports division into a separate company, I guess, or a separate website or a separate entity, kind of like Sina House. Now, later, Sina House, of course, went public on NASDAQ. So do you have any plans for your PPTV Sport to go public?
It's actually, that's a rumor, by the way. First, I need to correct that.
Okay.
It's a rumor.
Yeah.
We do promote our sports center to, we call it a sports department, and or sports business unit, I would say, is the right approach. So we give them a lot more power in terms of adding more resources, and of course we have to control it financially in terms of whether they can be sustainable in its own. But it is a fully controlled and subsidiary of the PPTV, and we have not yet planned in any short term for spin off of this department. But it is really core, important business unit of a PPTV group.
Well, let's talk about the sports content too.
Yeah.
I mean, I guess it's going to focus on the sports industry.
Actually, if you're looking at compared to the developed world, sports media usually is the #1 media, even larger than entertainment media.
Super Bowl, World Series.
Super Bowl, yeah.
Right.
Super Bowl itself, actually, the NFL itself, that makes money is equivalent to the entire Hollywood.
Yes.
Yeah.
Yes.
So sports media usually is larger than the...
Do you see this in China changing in the future then?
China is actually coming. Right now, the China sports media, for many reasons, actually, is at a very, I would say, infancy stage, even right now. Very difficult to make money from sports media. But that is coming, because now China, of course, you can see the China in terms of the overall wealth stage, and people doing really well, and they're all like more sports better than before. So I think given that, the development and the sports media will grow really fast.
Okay. You know, it's a business show.
Right.
So let's talk about your profit model. How do you make money?
Okay, that's a very good question now. And currently, our primary model is still the advertising. And although advertising, whether it's the right model or wrong model, it is something that is still be very I'm a little bit struggling on that part.
Okay, tell me about the advertising and how is it a struggle?
Struggling because it's this, and just like right now in the online video world, even, and most of video companies are making money from advertising.
That's the 30-second spot before the
adding
video
30 seconds. Okay. And right now, we actually adding 1 minute ads in front of the any shows. Right, we have to make money. But unfortunately, I think in the later of this year, next year, I'm pretty sure all the video companies were adding middle roll for the online video streams.
Yes.
So in the middle roll, so basically when you're watching like 20 minutes, you have to stop and watching the...
that happens in the States. We have a lot of streaming, and every 15 minutes there's one and you can't click through it. But you get the free content.
Correct.
So it's give or take.
Yeah, that's the Hulu model. Basically, Hulu every 50 seconds you have to watching 2 minutes.
Right. Yeah.
So we find out this actually is affecting those experiences.
Right.
So I believe there's some smart ways of doing that. We're experimenting that. Smart way of doing that ads instead of adding, just more and more ads in front of your content. So we're still working on that now, and I cannot tell you what it is, but I'm sure And in the advertising mode, we might be able to come up with more better approach by leveraging the content, as well as the advertising dollars.
Now you've given us a clue, so I have to ask further questions about this. Would it be also still further playing, a 30, 20-second, 1-minute spot, or is it going to be more hidden, like product placement inside content?
Right. Yes. I think the way to get a run of that is actually try to leverage the content, because people watching a longer hours on the online right now already. For example, our PC side, average daily watching hours per user, 2.5 hours. You're right. On iPad, 90 minutes.
Yes.
Even on the phone, 60 minutes.
Yeah.
This already create a lot of time spent on those video platforms. So we think there's a lot of way to monetize it, because this is the internet.
Yes.
And different from a linear TV station, like linear TV 24 hours. There's no way for them to add. So the only thing they can do is insert ads in the middle row or front row. But for ourselves, online video platform, I think there'll be something that can be creative to add, like, for example, product placement.
Right.
Yeah.
Okay. In new content or live content.
Live content.
Okay.
Yeah.
Now let's talk about the profit again then. So how much % would that be from advertising? Maybe 80%?
So far, we have about 70% coming from advertising. Another 30% coming from we call the value-added services. Value-added service would be a fee-based subscriptions, and that the virtual goods.
Right.
So people paying us, for example, in our sports. If you watch the sports, you're supporting one team, and if you like it, you can throw kisses, flowers. And if you don't like it, you can throw a bad egg. And one egg is free, but a basket of eggs costs you $10.
Wow.
Yes.
Okay.
So that kind of a virtual goods things that can be added into those
Now this sounds
program.
to me it's attractive to the 90s generation, which is perhaps good news to you, because 61% of online users in China are the post-90s generation.
That's right.
It's fascinating. What about your demographics of people coming to PP Live?
Pretty much like that.
80s and 90s.
Yeah, 80s, 90s are coming from the much more younger generation. Definitely the generation are less than 45 years old.
Okay.
Yeah.
But what's the generation or the demographic with buying power?
Yeah, it will be younger, like anywhere from 15 to 25.
They have
Those
buying
are the
power.
ones that are more acceptable to the internet, more acceptable to the online payment, like virtual goods, those kind of things.
Right.
Yeah.
The 3 RMB, 10 RMB, the small purchases.
Right, and they really want to express themselves. They're different from older generation. Older generation stay and watch. Watch
and that's
what it
they're
is.
used to. They're disconnected from
Right,
TV.
they want to get in. Yeah, they want to get involved. They want to engage.
Right.
And even now, we find a lot of people when they're watching the videos, they're multitasking.
Sure.
Right. They watch the TV. They play the iPad.
Yeah.
They play the iPad even like a PC. They do some watching video. They have to do something else.
Right.
Multitasking. That's about this typical behavior of this new generation.
Talk about the market share then of PPTV with all of the competition.
Right. And the recent number that on the PC side, and we ranked number 2 in terms of overall user base, and we've been doing very well in the mobile. And on the mobile side, we've been ranked number 1 so far, and especially on iPad, users, and the PPTV is ranked number 2 among all applications. The number 1 application now on iPad is a QQIM. The number 2 is actually PPTV video, and is higher than Taobao, Weibo, any others. So we do see on the iPad platform, video become the major entertainment, the channel for the users.
Talk about the technical requirements to sustain 300 million users with 3G. I mean, that's the population of America.
China, given this massive user base, is very different when you do China internet company than you're doing that in the United States. And because of this population, and it's wide distributed, and our network is not homogeneous. It's very fragmented. And you see some great networks in Shanghai, but you can see tier 2 or even 3, 4, tier 4 cities, very poor network connected. So you have to accommodate the different, the hardware infrastructure, very different. And also you have to be able to accommodate different user behavior and different user watching behavior. So when you open up PPTV, we actually can tell where you're coming from, either Shanghai or tier from other or even rural area. So you're going to see different content.
Let's bring this to a practical level. Tell me what people in the 3rd and 4th tier cities in China are watching.
Still primarily drama and movies.
So entertainment.
Yeah, entertainment, yeah. But that's mostly domestic drama and movie. But if you're looking at tier 1 cities, people not just watching a drama movie, but they actually spend a lot of time when watching like international content, like a Korean drama. And that's why we actually acquired the Korean dramas exclusively rights for the 3 years. And they love to watching some sports content. They love to watch
international sports.
Yeah, international sports. They love to watch the some American dramas, probably a lot more than the domestic content. So you have to balance that content. The second one is about mobile. Mobile, of course, become a factor that is more like a companion product. It's always 24 hours, always with you. So we feel the mobile is really your control center. It becomes a control center. But the mobile, depending on the time of the day, you also stream it differently. For example,
during the work hour, maybe.
Correct. During the work hours,
Yeah.
they probably won't watch like a heavy drama, something like that.
Right.
They really want like a short clips, sort of a news, some entertainment news or that kind of things. That's simply watching. So you can stream more of those ones to the different time of the day.
PPTV is accessible from 3 systems, including PCs, mobile devices, and Internet TV or set-up boxes provided by licensed carriers. And among them, the price of advertisement on the mobile device is 2 to 3 times of that on the PCs. PPTV has done a very good job on creating apps for mobile devices, and you may think that that would have brought a huge profit. However, some reports said that PPTV couldn't get the total investment of $250 million from SoftBank, and it is facing a very serious problem of cash flow, which can only support the company till July of this year. Is that true?
What about the financial situation then of PP Live?
We've been doing quite well, I think. Be very happy. Of course, the first few years been very challenging, I think, for all the video companies because everybody's burning a lot of money. And the last year, and we finally actually got into the break-even stage. That's
yes, I read 800 million RMB you reached, and that was a break-even point.
Yeah, get up to the break-even point.
Okay.
So that was really good, great milestone in our business. And this year, and we'll continue to invest, of course, continue to be within that break-even stage, because we've been investing a lot more on not just the mobile product. And you probably heard we already built our own set-top boxes.
Right.
Yeah,
yes.
we call the PP box. And we sold our PP box the first batch in 3 minutes. We sold all of our boxes. And it was only 1,000 actually.
Okay.
That's what sort
testing
of
the market.
Testing market.
Right.
We just see how the market will look like. But only 3 minutes, it's been all sold out. So we're actually manufacturing our next batch of our
So you're
boxes now.
then what you're saying then is you're spending money now to earn money later.
Correct.
Because the manufacturing technology of this.
So financially, we try to sort of get company. It's not at the stage we think you can be very profitable. So we basically control our costs in a way that we think we have at the break-even point. And now is whatever the dollar or extra profit we make, we're going to reinvest to this new market.
Okay.
On July 4th, 2013, one of the biggest competitors of PPTV, Le TV, started to sell its Super TV in collaboration with Sharp, Foxconn, and CNTV. And 10,000 Super TVs were sold out in the first 49 minutes. PP Box versus Super TV, which will be the winner? Another reason why PPTV is suspected to be lacking capital is that it obtained loans of 200 million RMB from different banks, including China Merchants Bank, Bank of Communications, and Shanghai Pudong Development Bank.
We do have some bank loans and help us to bridging some of our cash management. For example, manufacturing our boxes, and especially all content investments as well. And this is very typical in our industry. And when we invest our movie and drama, again, we actually invest our own movie and drama.
Yes, there were two, weren't there?
Co-invest movie and drama with many other investors or producers together. And usually we use the bank loans to finance some of those investments as well. Yeah, it's very typical in our industry.
Tell me about that profit model of creating your own entertainment, the dramas, the TV series. Are they short forms? Are they 30 minutes? Are they 12 minutes? Are they an hour?
Yeah, basically we create this model we call theater online program.
Okay.
So what that is, actually we create a movie, and this movie is actually shown on the theater. It's actually a theatrical distribution.
Okay.
And we basically invest as co-investor. But we get a right. The rights will allow us to make online version of this movie.
Which is different?
Which is very similar. The movie is, of course, is hour and a half, usually hour and a half. But online version, it can be 3 hours.
Okay.
And 10
Almost
minutes.
like the director's cut then.
Correct. And 10 minutes each, so you can have like 30 episodes or stuff like that. And you can add a lot of things, which is more than the movie that it can show. Because the movie have to be...
But the production doesn't change that much.
Production
You're going to shoot all that anyway.
Correct. And production is the same. So basically, its editorial will be very different. So this is actually the way we create a new format. So you see this is a new format of program. And the same cost, but we end up with two different products. Two different products. One is, of course, for movie, and one is for the online users.
Now, tell me about the profit base from both of those models then. Yeah. Where do you see more profit?
For this kind of things, and we've been trying for the last 2 years and been very successful. First, we almost get the money back through the...
in the box office.
In the box office. Okay. Almost get the money back. Not much making. It's difficult to make money as well.
It is.
But we almost got a free investment for getting this content online. So we actually get a free content based for the online platform.
And then do you sell the viewership for that?
Viewership for advertising, yeah.
Okay.
The collaboration between online video suppliers and big IT companies seems to be a common phenomenon. In 2009, Shanda acquired Q6. In 2011, Renren bought 56.com. And in 2012, Tudo and Youku combined. And this year, Baidu merged with PPS for $370 million. Who will be the one to acquire PPTV?
The mergence between online video sites seems to be a phenomenon in this industry. And so what do you think about this phenomenon, and will it happen to your company?
It is true, of course, the industry has gone through this consolidation and will continue, and I believe that consolidation will continue. But as a matter of fact, the consolidation probably will not just happen among those internet companies. And I believe in the future, in terms of this consolidation, you will involve more groups. I usually mention about the 7 groups will be join the war of online video. 7 groups will be joining the war of competition. First group is independent video companies like us, like Youku and the PPS as well. And the second group is the traditional internet companies, including, of course, Baidu, Alibaba, Tencent. Third group is IPTV cable guys. So the fourth group will be devices company, for example, like Apple, Samsung, and
the technology
Huawei
providers.
They basically know their devices. They're making TV devices. Now they find out they're not just sell TV, they should sell services.
Right.
So like Apple and Samsung, they actually sell hardware plus
the apps and
plus the software.
Yes.
So this will call the devices company. The fifth one is IT company like Microsoft, Google. They already joined the war, and they're building Microsoft TV, Google TV. Intel joined the war. You heard Intel TV is coming. Cisco, even they're making routers right now. They're making set-top boxes. So Cisco, those IT companies join the war. The next one, the sixth one, is traditional TV broadcasters.
Okay.
So they will need this kind of channel to streaming their content because they only have a linear network, like 24 hours, not enough for them. So they're going to join the war. And the last one is operator, telecom operator, mobile operator. And they will find out a video already in China occupy more than 75% of bandwidth.
Their bandwidth.
Yeah, bandwidth is actually 75% above. Is all consumed by the video.
Okay.
Not a voice, not data. So
where do you see the social media platforms fitting into these 7?
Not yet. Social media, I see, is another set of it.
Okay.
And the video is one very...
And they're just driving the videos.
Yeah, they may have they do any other kind of, any other media types. But a video as a vertical already be kind of a center for those 7 groups. So consolidation will happen, but in the future you will see a bigger and a bigger, more huge consolidation.
And these
happen.
are the 7 major players, what you're saying.
7 major players will all come to fight.
PPTV has negotiated with IT giants like Alibaba, Baidu, and Sohu to receive investment or to be acquired. However, none of them succeeded. The public is guessing why PPTV refused to merge. Some people say it's because the price hasn't reached its expectation, and others think that the management team of PPTV is worried about losing controlling power of the company.
The media reported that you've negotiated with Alibaba, Baidu, and Sohu to get some investment. Is that true, and what was the result of the negotiations?
Now you probably see there's a lot of consolidation happening in the industry. So if you're looking at this market, the PPTV almost is a single-scaled independent company, is only independent company in the market. So definitely we've been approached by many, of course, investors, including investors offering buyout plan, offering strategic investment, or financing investment. So of course we're evaluating all different options at the moment. And of course, I believe the media is really...
Well, the media is hungry to find out.
To find out what you're
going to do.
What are we going to do, yeah.
But I imagine you would choose a partnership that would be a win-win situation. What would a win-win situation look like then if you did partner with any of the big guys?
I think for PPTV, for our next stage, we're definitely looking at not just capital money, but also strategic resources. And that help us to positioning well in this industry and being able to compete and stay ahead with other competitors. So we have to be very cautious of selecting partners at this moment. And of course, by talking to various of potential investors, and we make very clear that PPTV needs to be very independent, and we believe our brand, our user base, and are still very strong, and believe we can grow the company to the next level.
So in other words, it won't change your company, it will only add a new service or add a new value with a partnership.
Right, yeah.
Okay. In an interview, you admitted that it's almost impossible for PPTV IPO at this stage. Why did you say that, and could you tell me the IPO plan of PPTV in the future?
Probably is the wrong wording, I think somehow captured, but actually I always say IPO is always possible for PPTV. And although at this time being, and the IPO doesn't sound a right time window for us, but I believe the IPO time window is coming, and it's coming.
So you think it's inevitable?
Yeah, we're actually in plan